Hello. Good afternoon, everyone. Welcome
Howdy.
to the Luck Summit. Howdy. Thanks for joining us today at the Luck Summit. This panel is, where is the money? Question mark, big question mark. Access to capital, a deep well of experts in front of us. Thank you for joining some of the early outlaws, I'll call y'all, who stepped into this space early and did it well. So thanks for being with us today. My name is Gaynell Rogers from Treehouse Global Ventures. Shout out to my two founders, Lori Ferrara in Chicago and Lindy Snyder in Philadelphia. Hope you're joining us today. We're a fun focus on conscious capital, impact investing with a healthy lens on women and minorities. I'm very proud to say I'm a 3-time cancer survivor. That's how I entered this industry. And I have been in the industry since 2009. It's an honor to be here with all of you today. I want to introduce my esteemed guests from all over that I've known for a while. Please welcome Al Forman of Tuatara Capital in New York. Al has over 20 years of professional experience in private equity, corporate finance, and financial technology, and a broad range of transaction and structure experience. He's been there since the beginning in 2014. Is that correct, Al?
That's correct.
And as Chief Investment Officer, that's a heady title. Super knowledgeable and articulate leader. We really welcome you today. Thanks for being here.
Thanks for having me.
You're welcome. Joyce Denali of Big Rock Partners in San Francisco, who is the managing partner with a fantastic slate of leading portfolio companies in the space for the past few years, adding recently the Sonoma Hills Farm to the family, which is quite beautiful. Joyce is a Smith alumni. I say that because she went to school with my niece, and leads with a lot of heart and soul, and just a really amazing toolkit of understanding of operations and execution. Thanks for being here, Joyce.
So happy to be here. Thanks.
You're welcome. And Matt, who I love to speed date with whenever I can, of the Arcadian Fund in Los Angeles and from Texas, comes from the sports and entertainment world, all-around experienced fund manager in many ways, and an investor inside and outside of the cannabis industry, of which we need a lot more of that knowledge. Matt is great at developing and motivating really skilled professionals, the ones that are willing to listen, I might add, and an all-around great human. So thank you for joining us today, Matt. We've had a lot of fun, and we look forward to seeing everybody in person, hopefully, in the late fall or 2022. So we have a lot to, I want to give you all some general categories, but before that, because we're with our tribe at Willie's Ranch in Texas, I wanted to just point out that behind me is a very old lunchbox with Trigger on it, because Trigger is one of Willie's most favorite guitars. So that's why that there. And on the other side of me are handmade boots from Larry Mahan, a 6-time world champion, rodeo champion in Texas, who makes some of the most beautiful boots you ever want to see. So that's my little Texas flavor back there. Had to do it from the prop closet. So we have some discussion points. We're going to tell some backstory of each of these organizations. We're going to talk about how to step in initially as an investor if you're new to this investment and cannabis community. We have a resource sheet, by the way, that's going to be plopped at the end into the chat so that you can look at the financial newsletters and some of the links to all of their websites so you can do some homework there. We're going to talk about risk management, which seems to be not as great of concern as it was in the past, but for new adopters, it still is of great concern, depending on the boards they sit on and the advertisers they accept. So it's kind of how that goes, but we're going to talk a little bit about that. And then we're going to talk about political will and how that's changed. So that's the idea. And then we'll have a little bit of time for Q&A. So Al, why don't you start and tell us a little story about your life at Tuatara?
Happy to, and thank you, Gaynell. For a second, I was confused as to who you're referring to when you in the introductions. Like, I barely know that guy, but I am really excited for this conversation, and I'm honored to serve on the panel with you and my esteemed peers. So, backstory on Tuatara. So I started in the cannabis industry in early 2014 as a co-founder of Tuatara Capital, which is a cannabis-focused private investment firm. prior to launching Tuatara, my partners, Mark Riska, Mark Zitman, and I were trying to invest personal money in the space. And at the time, we were really having difficulties based on endemic challenges with the industry at the time. Inconsistent terms across deals, the quality of the intermediaries and advisors, unrealistic valuation expectations. I mean, things that you would expect kind of at the core of an emerging market. So it was really those challenges that led us to the thought of launching Tuatara. We believe that Tuatara would be able to provide investors with an efficient pathway to building a portfolio of cannabis investments by backing professional investors who are actively managing a diverse fund portfolio. We really felt that, at the time we dug in, that the industry was extremely complex and challenging across many fronts. State and regulatory inconsistencies, challenges with banking and capital raising, taxes, and the general overhang of the illicit market, which was strong in 2014.
Sounds like so much fun.
It was decidedly a signal of, if you're going to do this,
kind of like, those water spouts.
Exactly right. You needed to roll up your sleeves and truly dig in. So we really felt it was necessary to take the institutional approach with a full-time professional focus and a team to be able to successfully navigate the complexities of the industry. So current stats on Tuatara. So Tuatara is headquartered in New York City, and we currently manage a little under $400 million in assets focused on legal cannabis across 2 flagship funds. Tuatara is also the sponsor of Tuatara Capital Acquisition Corp., a $200 million listed NASDAQ SPAC. So given our size and our assets under management within the landscape of cannabis firms, Tuatara would likely be positioned as a large cap firm. Our investment focus really spans from growth equity investing through to controlled buyouts, meaning we don't support startups. We're looking for companies that have, call it 2+ years of operating history, that have the right teams and business plans to successfully scale. So with that as the focus, in our second fund, we've underwritten investments that range from minority stakes through to control positions between 10 and 50 million of equity per investment. Our investment thesis is really founded on the broad utility and applicability of the cannabis plant and cannabinoids. The plant, by definition, is the most biodiverse plant on the planet, so 120 plus chemical compounds, 450 plus flavor and taste molecules, and it has demonstrated efficacy across a wide range of impactful human conditions over the last several thousand years. And this includes pain, inflammation, appetite, anxiety, and sleep. Tuatara's thesis also points to the belief that the cannabis industry is currently evolving to 4 distinct commercial end markets. So social consumption or adult use emerged in 2014 when the first US programs were put in place. Cannabinoid health and wellness and cannabinoid pharmaceuticals arguably emerged in 2018 with the passage of the Farm Bill. And industrial hemp as a category really also came out in late 2018, but will have a longer tail as the processing infrastructure for the more industrial uses are still coming online. So we believe that we are squarely in the midst of this cannabis industry evolution, and these end markets are taking shape. So in our practice, we really strive to support great companies that are currently operating in the cannabis supply chain and who have the ability and the wherewithal to scale into category leaders as the industry continues to further evolve into these distinct end markets. Broadly speaking, Tuatara invests in brands, specialized technologies, and distribution platforms. And we believe that as the industry continues to progress, successful companies in these categories will have a natural place in the future landscape of the cannabis industry. So in closing, before I pass it off, I'd like to point to a good example of a cannabis brand that we have financed and supported and that we believe has objectively earned broad brand recognition and decidedly their place in the future landscape of the cannabis industry. And that's our conference sponsor and Tuatara's first investment, Willie's Reserve. So the thesis has been underscored precisely by this gathering sponsored by Willie's. So that's background on me and Tuatara, and I pass it off to my fellow panelists.
Great, thank you. Joyce, you want to go next?
Sure. So it's so great to be here, and we have a really broad kind of range here, which is always this space is so, there's so many opportunities within it. You can have so many different avenues for the plant. first and foremost, Big Rock was formed by folks that love the plant. Not everybody that's focused on the space is actually a consumer, which is always interesting. But I do think that the majority of us, have a unique interest in the plant. I've been a user for over 20 years. I decided to enter the space because my dad passed away from cancer, and I just thought, wow, there has to be a better way, watching the suffering that he went through. So I actually started as an investor operator. A lot of folks, when they're taking a step into the space, want to invest capital. We see many companies or many folks try and invest in their own companies. And I did so at a time when, in 2012, we were in a medical market in California. So it was a little bit easier to spin up a company than it is now. I operated in the Sierra region, just outside of Nevada City, which Gaynell knows very well. That part of the state, however, did not actually move their process forward particularly expeditiously, unfortunately, when we did pass the Prop 64. And so I found myself, like many folks, in a situation where it wasn't going to be efficient for me to operate a business anymore. But I, at that point, had 4 years of, operating experience under my belt and a pretty nice network. So I partnered up with Mike Hardin, who had founded Big Rock, which is a family office. His background, he is a traditional venture investor, had focused in the technology and biotech sectors, and started approaching the oncology, medical opportunity within cannabis, and had invested in a few companies when he and I ganged up and started investing in companies together. Essentially, I think, having a managing operator or somebody that actually exists within the ecosystem of other operators within any region is extremely important. Here in America, we have siloed markets, every state, and sometimes within those states, you have varied regulatory models, which can be very prohibitive, particularly in the early capital stages of setting up a business. So we were basically navigating to try and unlock early stage operators in the 2017 into 2019 timeframe. We're a multifamily office, which essentially means we deploy our own capital directly into deals. We do, in some cases, syndicate special purpose vehicles where, when we participated, in an early stage company and we see them maturing, we will, in some cases, take a position as they come into a series round and start to actually issue stock or share, bring in shareholders, true shareholders. So we'll bring other folks alongside us, and we'll also participate alongside great groups like Arcadian. We're in a few deals alongside Matt. Hopefully someday we'll be in a few alongside Al and Tuatara as well. So we've really focused. We're sort of very California focused. California exports the majority of agriculture to the United States, and we also export and innovate the majority of technology. And we believe that, interstate commerce eventually is likely to open up. And if outside of interstate commerce, you do have, sort of IP and, foundational technologies that are already exporting themselves to other markets. So we focus on brands, in some case cultivators, and the surrounding IP and technology that kind of lifts them up, the platforms that allow for the scalable supply chain solution to find its way from seed to sale. We participated in something like, I believe, 40 deals. I'm proud to say that at least half of those are female founded, and we do try and place our money in the sort of diverse landscape that we sort of see in California. We believe that you need to support employers that are echoing their environments to be able to bring those consumers into the experience as well. And we also founded, to Gaynell's earlier point, Sonoma Hills Farm, which is kind of the first of its kind in wine country. So we operate that. I'm COO both of Big Rock, and my partner Mike is CEO both of Big Rock and of Sonoma Hills Farm, where we've hired Aaron Kiefer, who previously ran Thomas Keller's French Laundry garden. So he grew the best vegetables in the world. And he also has grown cannabis. He grew up in upstate New York and has been growing cannabis since he was 15, 16 years old. So he's pretty much if you're gonna eat or consume something, you want this guy to farm it. It's
a great poach, Joyce.
Yeah. A gorgeous piece of property. And yeah, so we are, continuing to look at and invest in companies that are, focused on ecosystems that, sort of evolving the best of class solutions and the best of class products onto the shelves throughout California. And we believe those will afford themselves opportunities in other states as well.
Great. Matt?
Hey, so good to be here with everybody. My name is Matt Norgren, founder and CEO of Arcadian Capital. As Joyce mentioned, we've done quite a bit of business with Big Rock and also Al at Tuatara. In fact, we sit on some boards, and these things are really fun to be able to get together with our friends and talk about this industry. For me in particular, I'm from Texas and went to school right there in Austin, played football at the University of Texas, and it's so nice to be speaking about cannabis, frankly, with even a Texas theme, because I can't ever forget getting off practice, and wondering if the coaches are going to be testing for cannabis when we walk in to the locker rooms, because that happened every week. And now all of a sudden we're looking at legal cannabis in the state of Texas. And frankly, even some people that used to coach me have reached out and they want to be involved in this. And I think, oh my goodness, it wasn't that long ago this industry scared us in Texas. I can't even tell you how much.
This was the flyover state, right?
Oh my gosh. But that's home
Not
for
anymore.
us at Arcadian. And we're so happy to be involved with Willie, of course, growing up there and being a big fan of everything he's meant to this industry. And our focus is on growth equity. I think this is a great representation of the great investor groups in this industry, because you have what Al calls large cap and probably the largest cap, actually. Al's being nice, but they're one of the biggest groups to write some of the biggest checks. We're somewhere in the middle. We kind of like the 1 to 10 million check. Although we never want to just invest once, we always want to have an opportunity to invest multiple times, because we think we can create value, and that gives us the best chance for it. So, we do invest multiple checks, and then in Joyce's case, they'll kind of do a whole bunch of different things. They'll go early, they'll go mid-stage. And so I think you'll get a really good representation of how investor groups like all of ours think in this space. In terms of our portfolio and stats, we have about 45 companies we're involved with. Have a 25 million fund, 100 million fund, and a number of SPVs. And the big differentiator for Arcadian is we've really made our business about the ancillary sector, the non-plant touching sector, which involves a variety of verticals. But we'll speak a little bit to that aspect of the industry and the picks and axes, if you will, all the things that go into the servicing aspect of what these big multi-state operators need. And that's really been our focus. And can't wait to come back to Texas and bring some of that there.
Yeah, great. This is great because it's a really wide palette of capability, but also focuses and amounts and early, late, in the middle. Some of you started, earlier than others. Treehouse is new to this family, as you all know. We started in 2018. We put our stake in the ground, and we did it, Lindy Snyder and Lori Ferrara and I, because we were advising all of our friends and family circles all over the world, really, about this industry and educating. And we wanted to formalize our consult and bring friends and family into this industry, which we consider to be a next generation wealth opportunity for women and people of color. And those are the populations that have the least access to people like us. So we wanted to put our stake in the ground. Took us a little while to get started because we started right before COVID, but we have just a few investments, some with you too, in delivery and also in beauty. And we just invested in our first hemp space in Alabama with Poseidon, alongside Poseidon. So I think that we have a really good diverse group here. One of the questions I think that a lot of people have, or the ones that we hear about, is how do I step in? What homework do I need to do initially to step? Father said I inherited X amount of money. I believe in the plant. I've used the plant all of my life since I was 15. Or for whatever reason, a lot of this is patient and family systems driven initially. But I'd like to just talk about how to step in if you're really a new adopter and you know nothing about the space. What tools would you give someone for that? Anyone jump in?
Well, I think I'll just go quick because I think it's really easy. And I'm not just saying this because you're speaking to fund managers, but work with these great groups, Arcadian, Tuatara, Big Rock, Gaynell, what you guys are building with Treehouse. There are a lot of great funds here. And as an emerging industry goes, you need to be properly hedged and diversified. And so these entrepreneurs, of which there's many, deserve resources, no doubt. And as a community of investors, we have a lot of great funds that I think you should talk to first, because I can speak for my partners here and panelists. They're doing great work. And all we want to do is see this sacrament brought to more households and more consumer products for so many reasons. And if you go at it on your own, I think go early. There is a lack of early stage capital, primarily because a lot of us as fund managers have grown up with the industry, and it becomes more difficult to try to do that, although we need to figure out how. But there are a lot of emerging entrepreneurs still that are early that deserve the attention. And in any other case, I know all of our firms would be happy to speak to you about working through us to get into this industry. We don't care who you end up going with. We just know that our groups are doing things the right way, and we're working really hard for these companies.
And I want to add to that, because I think one of the silver linings of COVID, frankly, is how collaborative we all have been together. I can lean on you, Matt, and Joyce, of just getting to know you, Al. But I do that a lot when I have a serious concern, or my brain trust doesn't want to look at that particular hemp textile deck or whatever it is. We have formed brain trust, so we can all look at things in the smartest way possible, and look at the double-edged sword, and have financial people that look under the hood of these deals that are quite complex sometimes, and other times they're very simple. That's one thing. But the other thing I want to say is I've seen a lot of mistakes in the marriage between funds and companies, or funds and the C-suites as they are, as in regards to founders. And I want to just say a little bit of truth about that. Not every CEO and founder is a great writer or speaker. Not every founder is actually a great executor. There's a breadth of seasoning and savvy that needs to come with early stage execution. And so we have learned the hard way, those of us who came in really early, 2010 or 11, the kinds of shifts and bumps that we have to go through in the execution team and the early stage companies that we did invest in. So comment on the stepping in, Joyce.
Yeah, so I think there's separating the opportunity to go private into a deal versus public into a deal. Someone asked a question: are there any ETFs or indexes? There are a few. We can share those behind this call. But essentially, the public market is still very latent, and we're mostly going to be listing in Canada. And the Canadian Stock Exchange, the two up there, the Toronto and the Canadian, there's a new one called NEO as well, which several of the new SPACs have listed on. I would just point out that the entire Canadian public market, not the entirety of it, doesn't match, one of the Fortune 500 companies listed on, NASDAQ or NYSE or anything in the States. So, our opinion, is that none of the folks that are analyzing public stocks have really had that much time and sort of understanding of the market. And, yes, that can give you opportunities to put $1,000 or $10,000 sort of micro bites, at the apple. But for those accredited investors that are really looking to, most of us want to, learn and be on the forefront of this new industry. And I think, going the direction of privates and, to Matt's point, participating alongside seasoned folks that, have done significant diligence to deals, makes good sense. In the private sector, I think there's sort of two ways to think about it, because a lot of folks are going to be focused on their markets, on their communities. It's not, I think a lot of the deals were structured initially, kind of echoing what we saw in the technology space. That said, a lot of these deals may end up, keep in mind, every market is siloed. California has a different scope than Oregon, has a different scope than Nevada, has a different scope than New York. So from a private perspective, you can find, real estate opportunities locally. You can find opportunities to do, short-term loans and such to operators. And then there are deals that are probably going to be more venture focused, some of the technology deals, some of the brands. So I think just, first and foremost, sort of understanding your own expertise, where you're comfortable. If you have historically done a lot of real estate and you're, looking at REITs and you understand that landscape, there's going to be opportunities for you. If you've focused on, a lot more private startup angel investing, that's going to be a separate, sort of function. So I think that, really the sky's the limit. To Matt's point earlier, also they focus on ancillary. Some groups are going to focus on plant touching. The biggest dynamic when you're going ancillary versus plant touching is understanding, the banking process and how you can protect yourself from not, raising any red flags from your financial advisors or your own banks. Another, reason to go through a fund, but ultimately, setting up an LLC, if you're writing, 6-figure checks and trying to silo those through, groups that have transparent banking solutions. If you're going plant touching, is a really smart thing to do. We always recommend that. But if you're focused on, ancillary, that's not probably going to be as problematic.
Anything to add, Al?
Yeah, I would say broadly for new interested investors, I agree with Matt and Joyce fully. First and foremost, invest in funds, because it's really hard and we work really hard to make sure that we do good things with your capital. But if you decide to ignore that advice, then I guess broadly speaking, start by doing your homework and developing a thesis. So we spent a year at Tuatara trying to understand the industry before we put our first dollar to work. Now, albeit there is more information available today, but it's really necessary to do your homework and make a determination or develop a thesis as to how you think things are going to play out going forward. After you have that thesis, philosophically try to figure out which managers or companies actually subscribe to the same philosophies, because now you have an alignment of interest. When you're doing your homework, know the difference between history and his story. Because all of us that have been in the industry a long time know that people do make their way around the block. You might have had a group that failed 2 years ago that has now just opened under new ownership. So you need to understand kind of legacy acts and how they flow through to today. And then with respect to the managers and how you actually build connectivity, even amongst the groups on this call, you need to understand who plays where and do your best to get in where you fit in. Because if someone calls and says, hey, I'm really focused on biotechnology and I have an interest in alternative production of cannabinoids, I know they've done their homework, I know they understand the segment, and I know they've called the right person, because we actually have an area of specialization in that segment of the industry. So it's important to know the landscape and do your homework before you start making entreaties. That would be what I would add.
Great. And I would also add, craft your own brain trust from family and friends, people that you trust, that that have financial savvy and seasoning. We have an extraordinary woman, Maria Rodale, on our board, who all she wanted to look at was agriculture and hemp, because that's her expertise. The Rodales started the organic food movement and agriculture, so they're very experienced about that. So we have a segmented brain trust that we present different deals to that we trust and that are experts, and they can take it to their experts and look under the hood as well. So the due diligence process takes a long time. This is why a lot of people like to come into funds, because they don't have the time or they don't know how to do, they don't have a CFO and financial advisors, 15 of them sitting behind you and looking under the hood of that deal. So that's why some people do prefer to come into funds, which brings me to risk. As a Southerner, also New Orleans born, one of the most frequent questions I get from the, let's just say, put it out there, the blue blood families of the South is their reputational risk.
Reputational risk. Yeah.
Reputational risk. There's a great deal. Did you see that? Okay, we're entering to the zone. Yeah, reputational risk. That was like Coca-Cola shutting us down. So I'd like to talk about reputational risk because there is ways to manage it. As you all know, I've done a lot of marketing and media relations in the space, and we've had a lot of federal and state intervention. And so that scares investors off. Anytime there's some kind of bump in the road, whether politically, medically, et cetera, there's a pause button of investors. So let's discuss the reputational risk management factor and maybe give an example of how you did that for your own fund if you had a bump in the road. An example would be good.
And by the way, apologies, you guys, I had to step out because the computer was going to die to get a charger. But let me speak to that real quickly because Texas, I tried to go home and raise money early on, and it was just a long ways off in the early days. But risk is about education. We'd go to dinner and we'd try to pitch one of these Texas investors. And by the time we got done with a 2-hour dinner with, queso and margaritas and fried foods and everything else, you're trying to figure out how to bring up cannabis as a medicine. And you finally do it at the end of dinner and they look at you like you're crazy. It's the worst thing ever, they say. And I said, friend, are you watching the same dinner I just watched? Because you're going to probably kill yourself from just your eating habits. And here's the important thing on the topic, though. You have to meet everybody where they are in their journey. It doesn't matter if it's step 1, 5, 10, wherever. What we need to do is industry advocates, whatever it is your aspect of the industry is, you meet them where they are because it's worth the process. It's worth understanding from that basic level. And no matter where you go, that's the philosophy we try to keep in terms of understanding risk for people.
Good. Anyone want to add to that?
I would jump in and I say that the reputational risk kind of analysis really occurs at 2 levels. The first level is the reputational risk of the actual investor putting money into the space. That is probably best managed by investing through an intermediary like a fund. So the manager themselves is the kind of the front line of defense. You are behind a commingled vehicle. So for privacy, confidentiality, and the like, it makes complete sense if you are concerned about reputational risk to use an intermediary. But there's another level of reputational risk, and this is at the actual investment company level. And so you want to make sure that you're actually supporting and putting money behind people that you actually know, trust, and want to do business with. So there have been a whole cast of characters that have emerged from the industry, I think due to its roots and kind of the illicit nature. So you want to make sure you run background checks. You want to make sure you have a sense of being able to determine who that person is and how they operate before you place money with them, because I think that's the biggest reputational risk to have. And so going directly into a company, I think, provides a scenario that might have increased risk vis-a-vis using a manager as an intermediary.
Yeah, to follow that along, I think, that there's risk for the investor, and then there's also the risk that the company is experiencing, in their unique set of challenges. Cannabis is not an easy industry to navigate. We're obviously building an industry that has so many opportunities, and we're doing so alongside educating not just access to capital, but also all of the regulators and law enforcement and NIMBYs in our markets. And so when we're diligencing a deal, we don't necessarily look negatively on a company that has had a blemish that maybe has been stolen from, that maybe has been, had some issues with metric, has had certain things with banking. It's how they reacted to that. It's how they, moved forward past that experience. And, I think that if you're looking at companies that have, a long view in this space and have been active in this space, there's going to be, a large number of question marks. And so as you're exploring this industry, just kind of understanding that going in, that, this is not going to be like diligencing, a traditional technology company or, traditional
Real estate
brand.
Right.
It's completely different. And so a little bit of just, acknowledgement of that journey is necessary as well.
And here's one example. I mean, what does that mean? Background check. So very early on, I was looking at a company for personal investment, and I asked about how to do background checks on their CFO and their CEO. And we figured out how to do that like they would if you were hiring somebody in, a technology job. And so the CFO came back with a 436 credit score, and and the CEO was even worse. And so we were just checking on their financial temperature of how they manage their own lives, right? Mm-hmm. So that's just one of 93,000 points that you can look at when you're vetting somebody that you love the idea of their company. They're painting this very rosy picture. The idea is good. Maybe the IP is secure. There's patents, whatever. But for us, it's really investing in the team and investing in the intention and the ethos of the company, as well as the numbers. And what happened for a while is the numbers, as you all know, the projections and the evaluations were just out of this world. They really weren't really realistic. So I think we've gone through some nut holes together in the space of time. We're growing up, but it's still, what I want to say to people is this is still a nascent industry. The institutionals and the funds and the bankers that I'm talking to from New York and London and around the world, actually, that are doing a lot of wealth management around the world, they still look at this as this is a good entry point. And so I think that there's a hell of a lot of opportunity here. We just want you to be careful and do your homework. So next, and we just have a few minutes for this one, and then we'll take some questions. And we don't want to get political, but we do want to talk about political will, because in the last 13 years that I've been in the space, I have seen a dramatic change in political will. And I'll give you one example. Our friends in Mississippi, which we also considered for a short time as a flyover state, but not anymore, because they passed their initiative. Representative Joe Bumgart, Republican, kind of led that charge. We worked through the clergy, by the way, in that state, because people go to church in Mississippi, and we thought that would be a good way to start communicating to that state. And so, but when they issued their initiative, no caps and licenses, very low application fees, 7% tax cap. So they made it very equitable for the economy of their state. So that was kind of extraordinary political will on a state that nobody thought would come into this party. And I believe they got a 69 to 71% pass vote. So there is a very large example of the change of political will in a very, a state that's been historically very conservative, but also, again, the highest diabetes, the highest heart disease, the highest poverty level in this country. So that whole political temperature is changing. And I'm telling you, my Mississippi friends are damn exciting down there. They're just ready to go. Anybody want to comment on political will?
One thing I would say is that, we have now 17 legal markets. This past election cycle, I believe there were 6 ballot initiatives. In one state, there was a medical and a recreational. I believe all of them passed. And then behind that, we've had, 2 very large legislative initiatives, notably New York and more recently New Mexico. So every cycle that we go through, you're going to see, 4 or 5 states, and then behind it, the regulators and a lot of times the neighboring markets are going to react. And I think we need to really start having a mindset of, what's happening in my border state. A lot of people, said New Jersey, when they approved their bill at the ballot box, it's a little bit more restrictive. It doesn't have, a broader license scope. It's not as equitable for local businesses there. And then New York reacted through the legislative body with, a pretty robust initiative. So a lot of folks are going to be able to be awarded licenses there. And I think that was a direct reaction to, the sort of locked in mindset that they saw out of New Jersey. So I think it's just a note. Now we have a lot of initiatives that we can look to kind of, figure out what's going to work in our states. And if I'm a legislator in a place like, Maryland, I'm not going to be not counting in what's happening in the places around me, because eventually we are going to start to see some regional alliances. And if you make your state too restricted, you're going to start to lose an opportunity.
I agree with it. Well, you first, Matt.
Oh, no, I just agree with Joyce.
Yeah, I agree with everything Joyce said, and I would put an explanation point at the end of that sentence with a time frame. So I suspect we're going to have this back and forth in terms of state level momentum, that then prompting other neighboring states to put programs on. We're going to see this for the next 19 months until we get to the midterm election. And between now and then, if there's enough momentum built up, then the conversation in DC changes dramatically. But you can see what happened with New Jersey. New York's going, Connecticut shortly thereafter. They're looking at Delaware and Rhode Island as other neighboring states. Pennsylvania's calling for a program, has put it into their budget. So you can kind of see the way the story is going to play out. And the midterm elections, in my opinion, is really going to be the line of demarcation as to who's on and who's not.
I was going to say the same thing, Al. Well, we do speak a lot, but we also have neighboring countries. We have neighboring countries.
We do. We're the only ones. We thought we had a border problem before. Now we have Mexico and Canada.
Right. And so at the same time, when you talk about states, don't forget, you probably need 60 votes in the Senate, right? So Congress is passing this every couple of quarters now, it feels like, just to make a statement. We don't know what's going to happen if it got to the president's desk, but we can assume there's some people there that might be thinking that they would sign this. And so you're looking at the Senate. Okay, so you need 60 votes. How many states went legal at the last election? 5? That's 10 senators. Okay, we already had 3 states go legal this year and however many more before then. So you're talking 20 plus senators whose people have spoken. And that's what's happening right now. The people are speaking. And it's not just cannabis, it's every category. Thankful to be a part of an industry that recognizes diversity, female empowerment, minorities, and the planet. And people are being heard. They're being heard in cannabis. They're being heard in lots of categories. Senators are going to have to, as Al mentioned at midterms, think about their constituency, already having decided this. So I think you probably do at some point between midterms and the next presidential election get a real pass at this. And those are the reasons.
And it feels good because we see that light and we can feel it. And all those categories you named, and especially if you all haven't seen the new Time magazine on climate change, it is extraordinary. And it brings all of these spaces together. Everything's going to be part of this wonderful umbrella pie of innovation, infrastructure, economic drivers, etc. And cannabis is going to be right there, square in the middle, as far as I'm concerned. We are done. We are over. We're out of time, but let's go to Hawaii or something. Thank you so much for joining us today. It has been delightful to see all of you. Thank you for all of your time, your efforts, your advocacy. You can go on our websites and get our criteria, how to submit, etc. You'll get a resource sheet. Thank you for the Luck Summit tribe and Willie's tribe as well. You all do such a fantastic job. And keep the faith, and we'll see you the next time.
Amen.
Thank you.
God bless.
Take care, everyone. Have a great evening.
Bye-bye.
Bye,
Thank
family.
you.
See you guys
Bye,
soon.
family.
Bye, Matt. Bye, Joyce.